even know what in the world. It's going to be something like this every episode.
Probably, but that's
Yes.
just who we are. So let's
Oh
roll
my
with it.
goodness. Let's
So
roll with it. Okay. Hi, Tom. Hi,
hi
Derek. Hello,
world.
everyone that's on. We're so sorry for that 8-minute delay. Okay, so I would like to do a little introduction. We'll just get the show on the road. This is Adam Elm, everyone. If you're here, you know that this is our mortgage specialist. We're going to be doing a lot of questions today. If you have a question, if you wouldn't mind popping it into the chat or typing it into the chat, that would be great. And Cheryl, would you mind if anyone hopped on if they wanted to like face to face with him?
No, that's great. We have Tom and Derek both are standing by, and we can have up to 10 people in the chat.
Oh,
So
good.
yeah. So
Okay,
I'm super
awesome.
excited. Anybody that wants to jump on, let me grab the link right quick and put it in the chat so that if anybody wants to come on live with us, they are
Okay.
able to do that.
Someone else just hopped on. Hi, welcome. Thank you so much. Sorry for the 9-minute delay. Also at the end, I'm going to pop all of Adam's phone number, email, that type of stuff in there. If you had any questions or you're ready to get started, or, you know, you had a question about pre-approval, anything like that, and you can reach him. Also, I know that if you're just hopping on, we had some audio difficulties, so that's why we're both listening to one pink headset right now. So I didn't want
like
to
pink. It's
right,
totally cool.
right. A couple more people
Absolutely.
just hopped on. Thank you. Good. You can see and hear us. Good. You're listening, ready to learn. That's awesome. Did you have any questions today? If you have any questions, please pop them in the chat. Otherwise, we're just going to get started. Adam, can you just tell me a little bit about what you do, your background, how long you've been doing this?
Absolutely. So first of all, thank you, Cheryl. Thank you for Renee for letting me be a part of this. I've actually never done anything like this, so I'm really excited to be here with you guys. Secondly, I have a little bit of laryngitis. My son played a very, very intense weekend of lacrosse and won the championship. So it was all worth it, but I may or may not have been a little intense this weekend. All right, so I lucky for you, I bring that same intenseness to work every single day when I get here. So I'll work just as hard as I cheer for my kids for you. But I have been doing mortgages for 22 years. I've been with First Washington Mortgage, where I'm currently at. This is my 13th year here, and we do all different types of loans. There's nothing that we really specialize in. We do just about everything except for construction loans. We don't do those. Okay. Other than that, we can pretty much do just about any other type of residential loan out there. Okay. So I have 22 years of experience. My processor has, I think, 24 years of experience. And the owner of my company, I believe this is his 30th year in the business. Wow. So we have, I think we have enough experience to overcome any hurdle that may pop up, and certainly looking forward to earning your business and answering all questions you may have.
I am so super stoked about this today. You have no idea. I was telling Renee last week that there's all these people offering this information about mortgages and different ways to do it, and they tell you the what like really super quick, and then that's where it ends. And then when you try to find someone, they're like, oh well, I don't do that, that's too hard. I don't do that, that's too hard. And so when we were talking about it, and Renee's like, well, I'm going to be at the office next week. And I said, well, who are you talking about? And she says, Adam Elm. I'm like, no way. I got so super excited. So Adam and I actually met and had a meeting back in 2018. And then we haven't been in contact a whole lot over the last few years, but
I look the same though, right? Just 5 years.
I'm a whole lot grayer.
Great answer. Great answer.
But he's a super trusted mortgage specialist in our area. And he can't go anywhere where he's not known. So
yes,
I am.
That is true.
Everybody in my circle and outside of my circle knows who Adam Elm is.
Yep.
Around here. So I am super stoked about getting everyone that is on here and in the future listening to the recording to get to know you and to find out what you do and what their opportunities are as they want to, buy a first home, get into real estate as an investment, that sort of thing. So let me preface that a little bit with one of the things that I've been talking about with my clients being an accountant is doing a DSCR loan. And that's as much as I know about it, that it's not based on their income. It's not based on their taxes. And that's the biggest part, because with what I do with tax strategy is trying to make sure that they're not paying anything to the government. so with having them not paying anything to the government, their taxes don't look good to most mortgage lenders. So from that, I will let you take it away.
That sounds good. So wow, lots of different angles to go in here on. Okay. So obviously when you're self-employed, you want to have as many write-offs as you possibly can, and obviously pay as little as you possibly can. Okay. And that when you buy an owner-occupied house or a second home in the state of Maryland, you have to show your income. You have to qualify to do that. Okay. When it comes down to purchasing an investment property in the state of Maryland, it's still considered the wild, wild west. So it's still considered the wild, wild west at that point. Okay. Maryland passed a law back in, I believe, 2009, 2010, where if you buy a house, owner occupied, or a second home, you have to show the ability to repay back the debt. Probably about 9 years ago, these lenders, if you will, started popping up. Okay. We're not allowed to use the word subprime lenders anymore. Basically, we call them alternative lending. Okay. Alternative lending lenders popped up. And with them popping up, they came out with these DSCR loans, if you will, where on an investment purchase and an investment purchase only with 15% down, depending upon credit score. The higher the credit score, 15% minimum down payment. The lower the credit score, the bigger the down payment. You don't need to show your tax returns. You don't need to show your W-2s. You don't need to show your pay stubs. Realistically, you just need to show that you have the money in the bank. Okay. You have an investment appraisal done, and in that appraisal, that appraiser is coming up with a rent schedule. So that way you have an idea of what the house is actually going to be rented for. Okay. If you're an investor and you're looking at a house, you probably already know what you think that house will rent for. Okay. But having this program is basically just helping other investors right now that wouldn't necessarily qualify for a Fannie Mae loan. It's helping them build their portfolios right now.
Okay, awesome. It looks like we have a question. There is supposed to be a ratio in there somewhere too. Can you talk on that, Adam, a little bit?
It's no income, so there's no ratio. We don't list your work information. We don't list your income. There is no debt to income ratio when you're talking about doing this type of loan. It's basically equity lending is what it is, where as long as you have the credit score and you have the down payment, you're going to get the loan.
That's fantastic. And it is somewhat based on the income potential of the property, or no?
It is in a way, because when the appraiser goes out there and he or she does the rent schedule, say the house is going to rent for $2,000 in that area, and the principal and interest payment is less than $2,000, you actually get a point difference on the interest rate. If it's above what the normal rent schedule is for that area, your interest rate would be a point higher. Right now, because of where price points are, we're not seeing too many of the rents hitting that number. They're all unfortunately going to be above that number. But basically, what you're looking to do as an investor is you're looking to break even. And as the rates go back down, because what goes up goes down, people down the road can always refinance them, get a lower rate, and then maybe start to look at making some money at that point.
Okay. Real quick, I know that you have been talking specifically about Maryland. Are you able to do loans, or you have networks to do loans in other states around the country?
So we're actually licensed, and I can do loans in Maryland, DC, Virginia, Pennsylvania, Delaware, New Jersey, North Carolina, Florida, and Tennessee.
Wonderful.
Awesome. There's Scott's question. I'm in Virginia. Yep.
Let's rock and roll, Scott.
All right. So yeah, Scott,
Good.
Adam can help you there, and these are available in these others. So all these states that you're able to do them in, the same loan that you're talking about is available in those states?
Well, Tennessee, yes, to answer your question, but Tennessee, I believe you can actually do them for owner-occupied homes in Tennessee. Their laws are a little bit more lenient than some of the other states. Virginia is 100% like Maryland, where you have to show the ability to repay back the debt for an owner-occupied or a second home. Okay, so it would be done as an investment and an investment only in Virginia. I can tell you that.
So I'm gonna throw this.
No, North Carolina. I don't know North Carolina right off the top of my head, but I can definitely do some digging around and find out.
Wonderful. I'm going to throw out this particular scenario because this is a tax strategy, but I'm not sure. Then I guess maybe what you don't know don't hurt you. So if I have an LLC and I come to you and I have this property, and the property we've come, everything's good. Like, I can get the loan, I've got the money for the down payment. It is established that the rent should be around $2,000 a month. Then, and I buy the property. Now, it's under an LLC, so it's a business, total business. But then I move in as an individual. Are red flags going up?
There's no policing once the deal is closed.
Okay. So that being said, because you did specifically say owner occupied. So if I came to you and said I wanted to do this as an owner occupied, that would be a different scenario than if I came to you and said, look, I want to do this as a business investment. And then after we closed the deal, I moved in. It's
whatever you do after you take ownership of the house is up to you.
See there, everybody? I've been telling y'all this.
And just so you know, there's actually no difference to the rate if you want to buy this property in an LLC.
Right. Perfect. Okay.
We have a couple new people on here. Hey guys, thanks for joining in. If you have any questions, just pop them in the box and we'll have Adam answer.
And apparently it's really loud for some of our listeners when you are emphasizing your points on the desk.
Okay. Yeah, I have the mic set up like right here. So, all right.
Okay. So, Derek, we have you in actually here live with us. What is your question?
Oh, okay. I was going to say Derek just needs to unmute. Maybe he'll come back because he's popped on a couple times.
Right. Okay. So let's see, what do we have over here?
Up there he is. Hi, Derek. Derek, if you had a question, go ahead and unmute. Right in the box.
So Derek said his connection is horrible.
Okay.
But he did ask the question in the chat, which about is 15% down the lowest
Yes.
amount for this particular type of loan?
Yes. You have to have at least 720 to put a minimum of 15% down. underneath a 720, you're at 20% from 680. I believe to 720, you're at 20%, and below 680, it drops to 25%.
Ooh.
And if you're over that,
If you're
over
above a
720?
720, if you're above a 720, 15% down.
Okay. So
Okay.
15 is like best case.
Correct.
Okay.
Best case.
Correct.
Okay. All right. Well, that's pretty big. So so I've come into you, I have an LLC, I have this property. Is this the loan that you would suggest to me, or are there other options that?
There is other options. It just depends on what your income is at that point, Cheryl. It depends on if you're self-employed. It depends on if W-2'd. It just really just depends. If you do pay, you make 500,000 a year and you pay tax on 500,000 a year, then you may qualify to do a Fannie Mae loan with. And when you go Fannie Mae, you can buy a house with as little as 20% down on an investment, 10% down on a second home. Okay, Fannie Mae. So it just really depends on your income and what you've paid taxes on.
Okay. So this would be the way to go if we didn't want to not claim all of our expenses for 2 years?
Correct, because we go back 2 years.
Okay.
So, and if you have not done your taxes this year, we would just need to see a copy of an extension, and then we would look at 21 and 22s, or I'm sorry, 21 and 20s.
Okay. All right. So one of the things that, and you already answered this, but I want to put this information out there, is if you are one of the people that are not taking all of your expenses in order to show more income on one of your last 2 years of taxes, then just remember, once the deal is done, none of this is policed. Go back, amend your taxes, and take all of those expenses that you didn't take in order to get qualified for the loan. There's nothing illegal about that. I think it's very convoluted, my personal opinion, that banks in general won't look at just the top portion of the tax of the Schedule C, for example, that tells you really what your business profited and doesn't look at all of the other expenses that the Internal Revenue Code allows us to take to reduce our income, our tax, our tax bill. And the fact that it doesn't, so that's a one way to get around it. If you do not want to do a DSCR loan and you do want to go conventional, and then you do have to leave expenses on the table, at least until for 2 years, which is going to mean paying taxes for 2 years until you can get that loan completed.
There's basically, you're either going to pay the IRS man for 2 years, or you're going to pay a higher interest rate on your mortgage. One or the other. Yep. You're not going to get both.
Right.
Yep. Oh, good. We have another question. Can you do those loans for buying prop in a trust using an EIN?
An EIN is it's a completely different animal. You cannot do that property with an EIN number. EINs I only have right now for owner-occupied homes. I don't know if there is an EIN program for investment properties at all. I've only seen that for owner-occupied.
So an EIN is just an alternative to using your Social Security number. So it would be an LIC. You can have an EIN with your LLC.
Oh, I didn't know that. Then if that's the case, then if you have an LLC, you can buy this. Okay.
So an LLC and a trust are very similar entities. So you can still do this with a trust. Suzette.
Is the question based around, I can understand what you're saying. So Adam, what you were saying about the 720, you're saying the rates and all of that. Suzette, were you asking that question to get around using your personal social security, and like maybe can you do it by the DUNS? Is that the kind of angle you were going for, Suzette?
She
Instead of
doesn't.
using your personal social security number.
Well, it's not so much that. She is involved with some people that talk about building an investment portfolio using
Mhm.
a trust type business entity versus
Okay.
using your personal name or
Right.
using an LLC. So they're using a trust. As far as the IRS is concerned and what the entity is, I don't think that that Adam would see a difference.
Okay.
Yeah, it's so
Trust owning the property, not an LLC.
okay. Go on to another question, and I will try and address that in a minute.
You can buy a house in a trust. I would just need a copy of the trust because it's got to be approved by the legal department before we can close. But you can buy a house. I'm actually closing somebody's house next week. It's a second home in Ocean City, and I'm putting it in a trust.
Did that answer your question, Suzette? Oh. Hello, guys. General real estate question. In your experience with the interest rate so high, thanks, Cheryl. Do you see prices of properties coming down first or banks offering better rates to motivate buyers?
It's a good question. I think they really have to get inflation under control first. And once inflation's under control, then you'll see rates going down. Right now, in the Maryland market where we live, there's still there's still bidding wars, and rates are in the sixes right now. So I don't see rates coming down this year until those bidding wars stops right now, because as soon as they lower rates, then that's going to drive up prices, because now people could start buying more with a lower rate. Okay. So I think that they have to even out the market. I think you have to have an even number of sellers and an even number of buyers and get inflation under control before I see the rates coming down at all.
That's a great question. Thank you so much, Suzette. Great. That answered your question.
Yeah, I'm going to have to do a whole separate video, like a planned one on LLCs and trusts.
Okay.
But I'll do that.
Yeah. And if, some more questions obviously pop up, we'll put Adam's stuff in there and
oh yeah, definitely.
Yeah. We'll put all of his information. Thank you guys for joining. Oh, you're welcome. You're welcome. You. Were there any other questions?
Okay. So Derek wants to know, is there another type of loan you can utilize based off of the potential income of the property solely? This would also be a first-time home purchase.
It would still be a DSCR loan, Derek. You'd still be looking at putting a minimum of 15% down, depending upon a score. Every time you go to buy a house, they're always going to look up. The appraiser's always going to do a section of what the rent is, what they think, what he or she thinks that house is going to rent for based upon the area. Okay. So really, depending upon what that appraiser says, ultimately depends on what that interest rate for that property is going to be.
That brings up another point. So it's the appraiser that makes this determination? Is it a specific appraiser that does it, or
it's not? What happens is when you order an appraisal, any mortgage company, any bank has to order it through what's called an appraisal management company. So we order the appraisal through the appraisal management company. The appraisal management company sends it to 4 different appraisers. And basically the first one that gets back to the appraisal management company says, yes, I can do this in a timely manner, gets that deal. So we don't really get to dictate who's going to be doing our appraisals for anything anymore.
Oh, wow. That's changed, right? It
It's
didn't
been
used to
like
be that way?
they changed that back in like 2009, 2010 is when the appraisal management companies came into play.
Oh, okay. I'm definitely out of the loop on that end. All right. So how do they, if I'm out there looking for a property and I'm just going to kind of do comps in that area, or should I try and find an appraiser to work with? I mean,
So not really, because whatever appraisal you pay for, you're going to waste your
wouldn't
money
count,
because
right?
we can't use that appraisal. So what happens is after you have the loan application signed to move forward on the purchase, that's when you can order the appraisal. So you going out there, it's not going to matter. What happens is if you have a real estate agent that's going to help you look for a property, Cheryl, that real estate agent also has access to pull in rental incomes for that area. So he or she could help you and give you an idea of what that house is going to rent for before you even write up offer to buy that house.
So then where I should concentrate would be on making sure that the real estate agent that I'm working with has the knowledge to help me find a property that would be a solid investment property
Correct.
in
Correct.
a particular area.
And a good real estate agent can help you with that. And you're going to know right away if they're a good real estate agent because they'll give you some pretty sound advice on, yes, this is pretty good investment. No, not really.
Okay. Let's see.
Another question.
Suzette. So, did you say if this type of loan is also available for multifamily?
Up to four unit.
Does that vary by state?
It does not. That's just the program that they will go up to a 4 unit.
And see, Renee and I have talked about bad information that gets put out
Mhm.
there, and one of the recent ones that I saw was that it can be done for up to 8. So,
Up
yeah.
to 8, it becomes a commercial loan at that point.
Oh, okay. And you said you guys don't do construction loans, but you do commercial loans.
Just residential. Only
Just
residential.
Okay, just
Correct. And
but
and
residential. Okay, never mind. Maybe I
and
don't understand that.
truth be told, we actually have the ability to do construction loans, but that's not really a mortgage product. That is a bank product with the draws and with the appraisers that need to go back and forth from the bank to make sure that A, B, and C is done so they can release draw number 1. And then they make sure A, B, and C is done to release draw number 2. Okay. If a mortgage company wants to do a construction of perm loan, it's probably going to be a disaster. That is a local bank type tool right there is when you come to a construction loan. You really want to try a local bank if you're trying to build your own house.
So I know that this may sound to the masses like this is a stupid question, but the difference between a commercial loan and a residential loan, I mean, obviously residential is a house, but can you elaborate a little bit on that?
Yes, I cannot do any loans. It's like on a commercial building, it has to be zoned residential.
Okay.
So in Baltimore, you see a lot of houses down there with storefronts, and then they have 3 unit apartments or, units upstairs.
Uh-huh.
Okay. As long as the 3 units combined square footage is bigger than the storefront, that would be considered a residential loan. And I could do that. But if the storefront's bigger than the 3 units, it is a commercial deal at that point.
I did not know that.
Yeah.
That's super interesting.
So that's actually a FHA guideline that as long as the 3 units are bigger than the storefront, that you could actually take that FHA if somebody was going to live there and owner occupied.
Wow, that's really cool.
Mm-hmm.
Is there a So residential, is there, if like an apartment building, is there a certain number of units that make it commercial and not residential?
Anything over 4, so
Oh,
5
and
or more.
okay. All right. So if we have 5 or more units, we know we have to go with commercial. And if we have 4 or less, or the and even with the storefront, if the residential portion is larger than the store, then we can still do residential loan.
Correct.
That's super cool.
Yeah, that was a great question.
All right. We've got like 16 people watching. Tell us in the chat who you are, where you're from, what channel you're watching from. Do you have any questions for Adam? The fact that we have him here and we are getting this information is just phenomenal. And hopefully he will come back and do this again with us sometime.
I'm available tomorrow too. Maybe I'll get my voice back. My wife said, you need to really rest your voice. And I said, well, do you want to eat next month? And she said, go talk away. I said, okay, thanks, honey.
Yes, I agree with that. Then, you can rest it at home and then she'll get the break.
There you go.
Highly unlikely.
You can tell her that, look, I just can't yell at the kids for the next month.
Right. There you go.
Gonna learn sign language here real soon.
Mm-hmm.
All right. Questions?
Anyone else? Here's an interesting question. Adam, what do you think about Zillow? Because I know a lot of people, that's like their go-to, even if they're just going to look for a rental for themselves. I mean, let alone an investment property.
Great question. So depending upon where your house is located, depending upon if Zillow's accurate or not. If your house is on the water or your house is in the city, in a city, Baltimore City, DC, probably not going to be very accurate. If your house is out in the suburbs, probably going to be more accurate. It takes a certain mile radius, and they do an average when they come up with the values for all the houses. So what happens is if you're on the water, it's giving you putting an average of people not on the water, which is going to give you a lower value. When you're in the city, it's several square blocks of an average, so it may not be accurate. In the suburbs, you're in a townhouse, a single family home community, you're getting more accuracy at that point. So it just depends on where you're at.
Great. We have another question.
So going off the self-rental to the LLC or business model that Cheryl mentioned, what pros and cons do you see for a DSCR loan versus an FHA loan?
Well, DSCR is investment only. FHA is only owner occupied. Okay. So if you're going to live there, you could do an FHA loan. If you're not going to live there, then it would be a different type of loan, whether it's a DC type loan, DCSR type loan, or if it's a second home, or it's an investment property. But FHA is for only owner occupied loans. Does that answer your question?
All right.
Let's see, we got a couple more questions. So going on, oh, okay, I think we skipped one. That's okay. I'm Marco from North.
Oh, sorry.
That's okay.
He was just saying thank you.
Okay, thanks. Thank you, Marco. So going off the self-rental to the LLC or business model that Cheryl mentioned,
That's the one we just covered.
Oh, okay. Okay, got it. Oh, there we go. Tom. Hey, Tom.
Tom, how you doing?
For new real estate investor of a rental property and or a flip, what percentage refinance for a property?
What percentage refinance? For an investment, you really want to have at least 25% equity in an investment if you're looking to refinance it to get the best deal. Does that make sense? If it's a flip property, you're not going to refinance that. You're just buying it, fixing it up, and selling it, flipping it.
Oh, that brings up a good question. So you just talked about the DSCR versus
FHA.
versus the FHA. So if you are buying a property to flip, what other options are there for loans?
To buy a house that you're going to flip, there's really only one type of loan, and that's a hard money loan.
Oh,
That's it. This type of loan is not really going to work for a flip simply because when you're buying a house that needs to be flipped, most of the time there's things wrong with that house. You're getting a really good deal on it. I don't necessarily know if it would pass an appraisal, depending upon what was wrong with the house. Okay. So the reason why you would do a hard money loan is because you can get the money up front. You can get the fix up cost up front too, depending upon what the final number will be after the house is fixed up. Really depends on what you need to put down at that point. You got a house that's worth 300,000 and you're buying a house for 100,000 and your fix up cost are 100,000. You might be able to get away with just paying the closing cost up front on something like that because there's a lot of equity in that. But typically you have to have that house done and sold, fixed up and sold within 6 months. They give you about a 6-month balloon to have that done.
Okay.
that's very interesting.
So flips are just completely different than investment properties.
Mhm.
Investment properties, something you hold on to, fix and flip, something that you buy and sell quickly. DSCR, debt service coverage ratio. There's no debt to income ratio. It's a stated loan on that. So there's no DTI on that.
Okay, so you could not rent to yourself with an FHA.
No.
Because you can't
Owner
have an
occupied only.
FHA loan, right?
Right.
And
Now, once you buy the house, technically you're supposed to live there for a year before you go and rent it out. I've never seen any company police it, to say, hey, does anybody, Mr. and Mrs. Smith, live here? I've never seen anything like that. However, I wouldn't recommend buying a house FHA and putting it up for rent in the MRIS system next month either. I'd wait a little bit of time before you went to go rent it out, but that's just me.
oh shoot, what was I going to say? Quick claim. I'm not sure how you
Quick claim deed.
Is it with a T or CK?
CK.
Okay. Can you speak on that at all? How that
works?
works?
So basically, that's if you're facing foreclosure. What happens is sometimes the bank doesn't really want to go through and drag the foreclosure process out. So depends upon how far back you are. They'll go ahead and say, hey, we'll give you $3,000 if you quit claim it and just sign the house back over to the bank. Okay. That's one version of a quit claim deed. The only other versions you're going to see is when people get divorced, when somebody comes off the deed because somebody no longer lives there in a divorce situation. Those are typically the only two times you're really going to see a quit claim deed or hear anything about that.
One of the reasons that I heard about it was that if, for example, the house that I'm in and I want to start an LLC and move the house from being in my name into the name of into the LLC. So that was the reason that I heard about the quit claim deed, was to do it for that reason.
I've never heard it called that before, but I know, sometimes people buy houses and then they want to put them in the LLC down the road. You can certainly do that again. You just need an attorney or a title company to help you out with that. So that way it's recorded properly.
And that was my next part, was that you do have to have a title company and do the like closing or some type of.
Yeah, because there's some taxes when you change deeds over like that are due at the time of the closing.
Okay.
So and every county is different. So I can't really tell you, what the percentage is.
Right. But that is just, if you are looking at doing any of this, making sure that you put your process in place when you get started, before you get started, so that if you want to do an LLC, that you even if it is going to be owner occupied, that you get the LLC started, you do everything in order so that you don't have to pay extra money in taxes doing a quick claim deed.
Correct. Now you're not going to buy an owner occupied house in an LLC. Oh, sorry.
That's okay. Hold on, guys.
Sorry about that. Sorry about that.
No, it's fine. Hold on. I'm like tangled up. The heck? Stand by. This?
There we go.
Okay.
Okay. We're back. You're not going to buy a house in an LLC if it's an owner occupied or second home. Okay. You would typically only do an LLC if it's for investment, where you're going to be renting it out. Okay. That's typically where you're going to put it in an LLC. FHA, Fannie Mae won't let you buy a home in an LLC.
Okay.
But DSCR will.
Perfect. Let's see. Tom's got another question.
Don't apologize. We're welcoming the questions. Thank you, Tom.
Right. With rental properties, I have heard some banks want 4 months of verification unit rented.
I haven't heard anything like that, Tom. Maybe the person that you spoke to, that could be an overlay for that bank before they lent you money for an investment property. Maybe some banks, some mortgage companies have certain overlays. My company, we lend right to the FHA, the VA, the Fannie Mae, the Freddie Mac guidelines, meaning we don't have any of our own overlays on things. Whatever Fannie, Freddie, VA, and FHA say to do, we do.
Perfect. So I guess, is that a bank versus mortgage company thing?
It could be. So like I'm gonna pick on Bank of America for a minute, only because I have friends that only because I have friends that work there that send me business. Bank of America claims to go down to a 640 credit score. Bank of America is not doing any loans under 660 for a credit score. Okay. When you're a bank, you typically can pick and choose what type of business you want to do. But so for FHA allows you to go technically down to 550. Okay. But we'll stop at 580 for right now. As long as you have a 580 credit score with certain criteria, FHA will let you buy a house with 3.5% down. Okay. Bank of America will never let you go below 640 to go FHA and buy a house down. That is Bank of America's overlay.
Wow.
So that would be like your company, you could go as low as 580.
Technically, we can go down to 550 because that's what FHA allows. Okay. But when you go below a 580, again, there's certain criteria that FHA looks for. But technically, we can go down and have the ability to go down to 550.
Okay. Criteria just changes below 580.
Correct.
Man, I've got to go back and listen to this again.
Yeah, absolutely. A lot of little gems in here.
So much information.
Yeah.
Here.
Yep. Let's see. Hi, Sandra. Thanks for joining. And let's see. If your home is going into foreclosure, could you put title into your LLC to save the home?
Sorry.
No, he's working. Yep.
If your home is going into foreclosure, could you put? No, the only thing that's going to save your home, one of two things: either pay, get caught up, or you work out a modification with your bank. That's the only way you're going to save your home. Doesn't matter where or what you put your home into at that point. Once it's behind, it's behind. And the bank doesn't care if it's in an LLC or the person's name. That's not going to matter. What's going to matter is the bank's behind and they want to get their house or they want to get their payments.
And then Tom has another question.
Oh, that's a good one, Tom.
With duplex, what loan option if house hacking where I live? I don't understand.
So if he has a duplex and he lives in the other unit, correct, Tom?
He lives in one and rents out the other.
Yep.
What loan? So that would be a multifamily, Tom. If you have a 2-unit, You could do a Fannie Mae loan. Fannie Mae allows 2 units. You could buy that if you're going to live in one of the units as an owner occupied, or if you're not going to live in either one, you could buy it as a 2-unit investment property. Fannie Mae allows for that. If you do not qualify income wise, you could certainly look at doing that for one of your DSCR loans.
Oh, that's good. Would I be
And-
limited to how many residential investment properties per year?
No, none. Zero. There's zero limit.
So as long as you've got the cash,
Correct.
you're in.
Correct. Cash is king.
So I have a lot of people watching that sell on eBay. So get those listings up.
Yeah.
Oh, sorry. Didn't mean to hit the table. Get those listings up. Get that
Yep.
cash rolling in. Then we've got some place to put it.
Yep. Absolutely.
Now we're getting all the inside information
Yep.
on how to start investing in real estate. This is great.
Yeah, this is great. We're loving it. Okay, here we go. What's a good resource to learn for first-time home buyers? I want to get familiar with all of these terms and types of loans available.
What's a good resource to learn? I mean, you could always, most people, depending upon how much money they have down, either buy their house FHA or they do a Fannie Mae loan, one or the other, conventional loan, Fannie Mae loan, same thing. Okay. That's typically, unless you have VA eligibility, you were in the military, that'd be another type of loan for you as well. Okay. But you could always Google Fannie Mae. You could Google FHA if you want to get familiar with terms. I know they're going to put my contact information up. You're more than welcome to give me a shout, email, text, call. I could go over things with you, but that's basically, as a first-time home buyer, one of the 3 types of loans you're going to go into.
Does your company have a term page or a FAQ on these different like acronyms and things like that?
We do. If you go to my company's page, firstwashingtonmortgage.com, I'll have Renee put it up.
Yep.
You could certainly go there and ask questions too.
Thanks, Cheryl. There you go. Boom. Sweet.
And again, we are talking with Adam Elm, first class mortgage specialist with First Washington Mortgage. And everyone around here knows who he is. He is really the go-to person. We are so blessed to be able to have him here and answering our questions. Oh, we got a new comment. All right. So, let's see.
Yep. As long as those units cash flow.
Well, you would hope that it would cash flow. Sometimes if it's a good deal on the property and you're looking at breaking even right now, it's like putting money in the bank. Everything's more expensive right now. The rates are higher right now. Things are going to go back down. So even if you're breaking even right now, might not be a bad investment, because eventually rates are going to go down and you can always refinance and get a lower rate. And then you're looking at some possible cash flow. So really just depends on what you find right now.
That's an excellent point. I have a client that was talking recently about investing in property, and one of the things he said was, so long as after all the costs that I would be able to make, say, $25, then I feel, a month, I feel like it would be a good idea. Well, I didn't feel the same way about it, but based on what you just said, that makes a lot more sense because of the timing of where we are right now.
Yep.
I actually have investors that really don't even mind losing $200 a month They're literally losing. They're cutting a check every month out of their own bank for $200, $150, $200, whatever it is, because they know how the market is and they know that everything's higher right now. And they look at that they're just putting money in the bank every single month. And once rates go down, they know that they're going to refinance and it will cash flow down the road. They're just saving, quote unquote, money. They're just spending some money until it gets there, and eventually it'll turn profitable. So not everybody's in a position to lose $100, $200 a month, but I do have investors that don't mind doing that in times like this right now.
And that is because property values have come back down after where everything skyrocketed, but the interest rates have gone up.
Correct. And eventually rates are going to go back down, Cheryl. So they're looking at it that they might make, $500 a month on one property and then have another property where they're losing $100 and $200. So really between the three properties, maybe they're profiting $200, but down the road, they're going to eventually refinance those two properties. And so then all three of them will become profitable at that month, at that time.
Perfect.
So again, it's just different strokes for different folks.
Yep.
You might find a house that's worth $500,000 that somebody wants to get rid of for $450,000. So you're walking into $50,000 in equity. You put the money down, you might lose $100 a month on it, but then down the road, you're going to have $50,000 in equity. Plus, you're going to be able to make money off that house. It's not a matter of if, it's just a matter of when.
All right. So let me jump back up here. So Philosophy says that he's in North Carolina, but thank you. And then
No problem.
Tom, I've gotten more real talk from you, sir, than my bank does.
Awesome.
They just put
That's
a stack
awesome.
of papers in front of me.
Yeah. That's a typical bank though, Tom.
Yeah.
They'll take your money. They just won't tell you where it's going.
And thank you for pointing that out about what we were just talking about. And then one more.
It's really not. It's actually pretty genius right now, because you're looking at a worst case scenario. And again, not everybody's in position to lose $100 a month, Tom. But again, what goes up goes down. What goes down goes up. And eventually that will turn into a very good, profitable property down the road.
Oh, here's a good question. Why is refinancing good for banks? Just to have more loans out in their spreadsheets?
I don't necessarily think it is good for banks, because the rates go down and the banks are making less money on you. So it may not necessarily be good for banks, but it's good for the consumer. It helps the consumer out. It might be more of a safety net for a bank, where, if you're already making a $2,000 payment, well, then you should be able to make a $1,800 payment. You could look at it like that, but, then the bank's looking at it like, well, we're giving them the same house and we're getting $200 less every month. So I don't necessarily know if the banks like it, but it's good for the consumer and it's good for the economy. When we can save the consumer's money, then the consumer's going to go out to dinner. The consumer's going to go buy a car. The consumer's going to dump that $200 a month into something else.
That's a good point.
Oh, is there, we've talked about rental real estate, but is there any difference in it being a long-term rental versus, say, an Airbnb?
Same. I mean, you're looking at the same thing. You're going to buy a house to rent it out, whether you get a 3-year contract or you do an Airbnb. Airbnb is ultimately probably going to pay you more, and the 3-year, 2-year lease is just a comfort. Like, hey, I'm going to get this money every single month. Airbnb, you're rolling the dice. You're hoping that it gets rented. However, you're going to make more money in the long run doing that.
And one of the topics Renee and I have been talking about here recently, where does land fit? Unimproved land, where does that fit into things? So say we wanted to buy a piece of property and do an Airbnb sort of campground.
So
unimproved.
I actually don't lend on land. There has to be a structure there. If you're looking to buy a chunk of land, local bank. that's your best bet for just raw land, and do
Okay.
something like that. There has to be a structure on it for me to lend as a home structure.
Right. No,
Right. A livable structure.
Correct.
I saw you.
Can't just be a porta potty out there and call it a
I saw
structure.
Cheryl like thinking like, a structure? Yeah.
A livable
Okay.
house.
Structure. All right. So do you only do in homes? We've got mobile, like the single and double wide. And I'm not talking about RV type stuff, but like single double wides. Do you deal with that at all?
As long as they own the land that it's on. If it's in a trailer park, mobile home park, no. They get their own financing. That trailer park, mobile home park has their own financing in a situation like that. But if they own the land that it's on, we can do it.
Awesome.
What if they went to buy, I mean, you're in Tennessee, so, or have the ability to be. So if they went to a dealership and wanted to do the mobile home with the land?
Could not help them with that.
Okay.
They have to own the loan. Basically, in that situation, they would get financing from the dealership and then they'd probably go buy land somewhere and then put it there. That's almost like a construction to perm loan because you have to put it on a permanent foundation. At that point, I would not be able to help them in a situation like that. Now, once it's on a permanent foundation and everything's done, then we could look at doing something.
Okay. I've lived in the South for a long time, so or I used to live in the South for a long time.
Yeah.
So very familiar with people buying trailer, mobile
putting all
homes.
these land. Yeah.
Yep. All right. Man,
Awesome,
this has been great.
Yeah.
So that same thing would fit into like a tiny house scenario. If they owned the land, then you would be able to help them with the tiny house.
Correct.
All right. But otherwise, a tiny house isn't any different than a regular house.
Most places,
If it was built on a permanent foundation.
Yeah, most places, if we talk about a tiny house, you're looking at least, you want a house with at least 800 square feet. When it gets under 800 square feet, Cheryl, gets a little dicey.
Okay.
Why? Why is that? I honestly don't have an answer, but I just know that the magic number is 800 square feet in a house.
For a conventional
FHA, conventional
FHA.
VA, yes.
800.
Interesting.
So I know people are building these small little homes in the back of their home and renting them out, or, they got kids living in them, these tiny people are literally just building those in cash, but I would not be able to lend on one of those tiny homes.
Okay. Wow.
Good to know. Yep.
All right. Well, we are coming up on an hour, and we do not want to take any more of Adam's time. He's got to go make some money for that beautiful family he has.
Yep.
So do we have any last minute questions that we can get in here right quick?
Is there still a mileage requirement for a second home loan? It has to be X miles away from the primary residence.
So, Scott, that's a good question. How can I say this? Yes and no. All right. If you live we live just outside of Annapolis. Okay. You want to buy a house in Ocean City, second home all day long. You want to buy a house on the Eastern Shore, maybe in, what's on the Eastern Shore? Rock Creek. Okay. Which might be 45 minutes, to an hour from Annapolis. As long as it's on the water, I could probably get that done as a second home. Nice. Sometimes underwriters don't want to turn loans down. Sometimes it's just helping the underwriters connect the dots, and do a letter of explanation like, hey, we want to buy this house, down the road, we're looking to retire. we're going to buy this house right now, you know, maybe this might be our forever home down the road, but in the meantime, it's our second house. You know, we want to help the underwriter be creative and help connect those dots. So as far as, you know, now, can you buy a house 20 minutes up the street and consider it a second home? No, Scott, that's probably going to be a little difficult, you know, but help me help you, you know, give me something to sell to the underwriter, if you will. But it doesn't necessarily have to be a certain, I have people, I have an attorney that runs a huge law firm in DC. He bought a condo, second home in DC, because it's close to his house, even though he lives in Annapolis. So it's got to make sense. How about that?
That makes sense to me.
Yeah,
Commute
it
time.
does.
That makes a lot of sense to me.
Yeah.
And this is just like I tell my my audience, my clients, it's all about the story that you can tell.
Yep.
To help the people understand why it's ordinary or necessary, or in this case, yeah, still ordinary or necessary for you for the second home. And there was one more up here.
Oh, I missed that.
Yep.
So if I buy land, do the foundation for 4 mobile homes, you can help me get the loan for those.
The homes would already have to be complete on those mobile on that permanent foundation for me to help you. So if you buy the land, the mobile home, you would have to probably get a loan from the mobile home place. Okay. And then once they're on the permanent foundation, everything's done, they're ready to go in, and somebody's ready to live there, I could probably help you refinance that. But as far as helping you purchase, probably not. Because at that point, they're not on a permanent foundation.
Yeah.
Even they're going to be, but right now they're not.
Perfect. Scott, we will not. Actually, you know what? I can pop it in there now. I'm also going to put it in the description for the show, Cheryl. You'll have to show me how to fix that in there. But Adam,
I'm going to do that
card
too,
in your pocket?
I do.
Okay. Hey, guys, Adam's going to give me a card. Hold on. Let me flip this around. Thanks, Adam.
But I want to put it up
Here,
at the...
go ahead.
Thank you, Adam.
All right, guys. Adam's going to come back on and wave and say goodbye to you guys. He's going to...
Thank you for your time, everybody.
Yep.
Thank you.
And
Thank
guys,
you
I'm going
so
to just
much.
flip. Thanks, Adam.
You're welcome.
Thank you.
See you guys.
Okay, hold on, guys. I know you can still hear me. Let me fix this. I'm going to put Adam's info in right now. Let's
If
see.
you will
Okay, yep.
read
I have
it to me, I'm
I have his
typing a
card.
banner. What's
Oh,
the phone
sweet.
number?
Okay, yep. Okay, so Adam Elm.
First
And
Washington Mortgage.
his email is adam@firstwashingtonmortgage.com.
Ooh.
I love all of this information. The amount of times I have thought about starting a mobile home park. I mean, so many times. Because have you seen like the triple wides? I mean, they're like better than my house. Amazing. Amazing. Adam gets points.
And we were just talking about, you know, campgrounds and camping and tiny homes and things like that. So this really gave us, I mean, it gave me a whole lot of clarity of some different routes and who, you know, who to talk to.
Oh, I was going to say, who's Jerry M? You lost me. I don't know a lot of like movie references. I'm lost. Oh, shoot.
Oh, Jerry Maguire.
Can I give you his cell to put in the banner too?
Yes.
Okay. And then we'll pop that in the show notes also. Or do these questions automatically go? They'll go onto the live, right?
They're in the they're in the live part of the chat.
Okay, good. And then I can pop it in the description on my YouTube afterwards. I can go back and edit it. Okay.
Yeah, because I wanted to put that in my description as well.
Yeah. Okay. His cell, you ready for his cell? It's 410-218-7972.
And I mean, I am totally going back and listening to this again because I know that there's stuff that I missed trying to keep up with the questions and things like that. And I need to go back and take notes.
If you have any other questions, I guess, Cheryl, we could put our emails in there too, because we want people to ask some questions. Maybe we can answer on the next episode if they have someone that they want us to have on. Just shoot
Sure.
the email over. I see Adam like twice a week. I work out of this office and I see him twice a week and I talk to him every other day. So if you guys have a quick question and you don't want to just email him directly, just put it in there and someone will get back to you.
Yes.
Yep.
Drop it below in the comments. My email, my contact information is also in my about for YouTube. I'm sure Renee's is as well, but we will also stick it in our description.
Yep.
Always, leave a comment. Let us know if you've got a particular topic that you would like us to cover.
Yes.
To find a specialist
Yep.
that you would like, that would be, just let us know.
Yeah. Between Cheryl and I, we know a lot of people.
I have a phone call with a certified financial planner today in 45 minutes.
Okay.
That I'm going to find out what he's allowed to, whether he's going to be allowed to come on here or not. But if he's not, then we're going to figure out a way to do a private Zoom with him.
Okay.
Yep.
Yeah, sweet.
Super excited about that.
That's very good. Very good. Also, guys, everyone, we have 10 people still left in here. How did you find out about our show today? Also, don't forget to like and subscribe to both of our channels. We're trying to reach some goals. That would be really great. We're here every Tuesday. This is what we're going to be doing every Tuesday. We're going to have like a good assortment of people on, and we're talking about different topics. So we would love to have you back. Make sure you subscribe and hit that bell so that you get notified. Like, oh, hey, it's Tuesday at noon. Let me go see these crazy ladies.
Oh, that's a really good question.
Yeah. If we could, gosh, Cheryl, how many agents do you know? Like, I'm not even exaggerating. I probably know 200. I mean, I used to be an agent, but
easy.
Hundreds.
I guess we could bring an agent or two on.
Absolutely. We can have up to 10 people on the broadcast, correct? Yeah. I found out through Cheryl. Sweet. That's awesome. Cheryl, I took a selfie and put it on Instagram and Facebook as Adam was talking, but since we were doing that whole, it's kind of an awkward one. So now I know if we have someone on and I'm with them, I need to have my soundboard next time so that we can both plug in.
Oh, okay.
Like, I can see Cheryl's mouth moving, but I can't hear anything.
And I was so worried. I didn't know whether it was my fault. Renee and I are still getting used to this.
Bear with it. Right. This is our second time, guys.
So it's only the second time. And this time she's on location. So
I always feel smart. Oh, isn't that Cheryl? Look at that. You're making Tom feel smarter. That's awesome. That's very good. Well, we hope to bring
great. I got to meet Tom last year.
Oh, really? Tom, are you here in Maryland?
No, he's in Florida. No, North Carolina.
North Carolina. Okay.
Wait, I'm confused now. Anyway, I met him in North Carolina. He's in Florida.
Okay. Sweet.
I think that's right.
Yeah. Awesome. Well, this was very good. Like you said, Cheryl, I'm going to have to go back and look at this all over again.
Yes.
And maybe take notes.
Yes.
Because there was a lot of information.
And the whole thing about the credit score.
Yeah.
That's
the kind of stuff that isn't being shared, those clips. And I know that people only have 30-second clips, but at least put the text on the screen to just let people know, you just can't do it just because you want to. There are rules, there are guidelines, there are regulations.
Right.
Which
or
we went
do
over
a follow-up. People do the part ones and the part
twos
all the time.
Yeah.
So, and I mean, I was telling my mentor earlier, I told Renee yesterday, the whole technology thing is really pulling this gray out because I'm feeling super OLD about not being able to keep up with this stuff. And I used to be pretty savvy. But doing the what and not the how is just, it's providing false information when it comes down to it. It's just,
it's very clickbaity too,
Yes.
You're making it seem like everyone can do it and not everyone is able to do it. Yeah. Yep. Well, I'm glad that we were able to do this. Thank you, Debbie. That was
Thank you.
That's great. Good. That's what we wanted.
Definitely.
So guys, let us know who else you want us to bring on. I mean, we're in. I love this. So let us
And
know if there's anyone you want us to have.
I thought that this was going to end up being more of a, an ongoing thing. And I don't know, there was so much information that
Mhm.
that got
Yep.
right into this 1 hour that
Yep.
I'm just,
We did it. Awesome.
yeah, my head's spinning. I've got all kinds of ideas going.
Oh yeah. Oh yeah. All right, guys. Were there any other questions?
Yeah, I mean, if there's anything that Renee or I could answer, we're happy to answer it. Whether it's real estate, whether it's something we talked about last week, whether it's a different revenue stream, just give us an idea of the things that you would like to see or talk about.
Yep.
We are more than happy to do that. Renee, to anybody that was not here last week, Renee and I we have a similar end goal on different paths, and that is to be completely mobile, to keep working, but live our best life. And
Absolutely.
whatever that means for you, that's what we would like to help you accomplish.
Yeah.
So just, give us an idea of what it is that you're looking for, and we will help you find those answers.
Yeah. No other questions? Well, thank you guys for joining us today. Like I said, look, we went over an hour again. I mean, we're two chatty Cathys. We really could talk all day, but.
And sometimes we do.
Yeah. Yep.
So
is that it, guys?
Yeah, I think that's it.
Okay,
so,
guys.
Renee
so
with
much.
Mommy Hasn't Showered, and I am Cheryl with Simplified Accounting with Cheryl, and we look forward to seeing you guys next Tuesday.
Yep,
Same
we'll be
time.
Here. All right, guys. Thanks a lot.
Thanks, everyone.